Welcome back to the channel. Today, I'm taking you into the deepest, most thorough comparison yet of two of the most talked about weekly income ETFs in 2025, WPAY from Roundhill and YieldMax from YieldMax. These are both fund of funds designed for weekly payouts, but their DNA could not be more different. Over the next 8 minutes, I'll guide you through everything: structure, mechanics, distributions, performance, risk, taxes, and real-world retirement scenarios. No co-hosts. No interviews. Just one voice and one mission, to find out which ETF is the real weekly income king. Hello viewers, if you are enjoying this content, and you do not want to miss future videos filled with even more tips, tricks, and inspiration, hit that subscribe button now to stay tuned with us and remember to comment and share. To start, let's clarify exactly what we're comparing. WPAY is a passive fund of funds. It tracks the selective Roundhill WeeklyPay Universe Index and holds an equal weight basket of Roundhill's single stock WeeklyPay ETFs. Its job is simple: wrap a bunch of weekly paying ETFs into one product and deliver consistent weekly distributions. YieldMax, on the other hand, is an actively managed fund of funds that rotates through YieldMax's option income ETFs as opportunities appear. Instead of tracking an index, YieldMax depends on manager judgment. One fund is passive and rules-based, that's WPAY. The other is active and opportunistic, that's YieldMax. Let's break down the backbone of both funds: weekly option income. Each underlying ETF inside WPAY and YieldMax generates cash flow by selling short-dated options, usually covered calls or synthetic covered calls, on high volatility stocks or growth names. This generates premium, which gets paid out to shareholders, often weekly. But weekly income doesn't magically appear. It comes with a trade-off: your upside is capped, because when you sell call options, you give up some, or sometimes most, of the stock's potential future gains. That's the cost of generating frequent cash flow. Now let's go deeper into WPAY. WPAY's structure is simple: it equally weights all Roundhill WeeklyPay ETFs. These include single stock option income funds on names like Apple, MSFT, NVDA, AMZN, Google, Meta, and more. WPAY doesn't alter the weights, it follows its index and rebalances automatically. This means WPAY behaves like a diversified basket of single stock covered call funds. Its job is to pass through the income generated by these holdings, which is why WPAY can support weekly distributions. The simplicity of the passive rules-based approach is a major appeal for investors who prefer consistency over active decision-making. YieldMax operates very differently. It invests across the YieldMax universe, which includes option income ETFs on big names like TSLA, NVDA, Apple, and broader index-based YieldMax funds. But YieldMax isn't equal weight, and it isn't rules-based. The managers shift exposure depending on where they believe option premiums are highest. That means YieldMax can lean aggressively into the highest yielding underlying ETFs when volatility spikes. This can dramatically increase income, but it can also increase drawdown risk. YieldMax offers potential for higher payouts but also introduces active management risk and concentration risk. Let's talk performance, and more importantly, distributions. WPAY tends to produce a steady, moderate level of weekly income. Because it equally weights multiple single stock option income funds, the distribution stream is smoother but slightly lower. YieldMax, by contrast, often posts higher trailing yields. That's because YieldMax's underlying ETFs are built to maximize option premium. But we have to remember, high headline yield does not automatically mean better total return. Many of these ETFs sacrifice a lot of upside, and if the underlying stock sells off hard, the fund's NAV can deteriorate faster than the income can compensate. So while YieldMax may look more attractive from a yield-only perspective, WPAY often maintains steadier total NAV behavior due to its diversification. When comparing WPAY and YieldMax, risk is the deciding factor. WPAY spreads risk across multiple single-stock weekly pay ETFs. YieldMax concentrates risk where its managers believe potential yields are highest, sometimes heavily in tech or high beta names. WPAY's passive approach means the fund rarely takes oversized bets. YieldMax's active approach means it can take oversized bets if management decides the yield opportunity is compelling. For conservative weekly income investors, WPAY's lower concentration may feel safer. For aggressive yield chasers, YieldMax may feel more rewarding, but comes with meaningful tail risk. Fees matter more for income ETFs than almost any other category. WPAY has its own expense ratio, plus the expense ratios of all underlying Roundhill WeeklyPay ETFs. YieldMax has its own fee structure as well, plus the cost burden of all the YieldMax ETFs inside it. Then there's taxes. Most option premium is taxed as short-term gains or ordinary income. And in some months, distributions may include return of capital, which has different tax implications. Weekly income feels great, but don't forget what the tax bill can look like. So where does each ETF fit inside a real portfolio? I generally look at WPAY as the core weekly income ETF, diversified, predictable, rules-based. YMAX works better as a tactical yield booster for investors willing to stomach volatility. If someone wants 5 to 10% of their portfolio in weekly income, WPAY is often the cleaner fit. If someone wants higher potential payouts and understands the additional risk, YMAX can be layered on top, but should rarely be the core. To illustrate the difference, let's walk through 3 scenarios: a calm market, a volatile market, and a sharp drawdown. In a calm market, both funds deliver stable income. In a volatile market, YMAX's income usually spikes while WPAY rises more moderately. But in a sharp drawdown, WPAY tends to hold up better due to diversification, while YMAX can experience sharper NAV declines if its managers were overweight high volatility names. Here are the most common questions. Is weekly income better than monthly? Only psychologically. Cadence doesn't change total return. Which fund is safer? WPAY is generally less concentrated. Which pays more? YMAX often pays more, but with higher risk. Can you reinvest weekly payouts? Yes, but be mindful of taxes and trading friction. So, which fund is the true weekly income king? The honest answer is, it depends on your risk tolerance. WPAY is the king of consistency. YMAX is the king of yield potential. For investors who want weekly income without big surprises, WPAY wins. For investors who want to chase maximum yield and accept higher volatility, YMAX takes the crown. If you learned something today, hit like, subscribe, and tell me which ETF you want to deep dive on next.